Hey guys, happy New Year everyone. I hope you and yours are going to have a very happy, healthy and fun 2019, and certainly from a trading and investing perspective from all of us here at the Steady Trader, I wish you a very profitable, a very consistently profitable year in 2019. One of the major New Year's resolutions that I have when it comes to trading and investing, once again for 2019, as I usually have, is to keep my emotions at bay and really to focus on generating that income and letting that income compound. So I made it one of my New Year's resolutions from an education perspective to teach you this year on an ongoing basis how to generate a steady return. We're talking between 8 and 10% a month or so, and how to compound that and the power of that. So I'm gonna make this the very first video today on January 2nd to go on that mission to really make this clear. Now you might be asking yourself, well, Serge, I need a strategy that actually makes me 8 to 10% on average throughout the year, a month. And so we will cover that all year long, so stay tuned to the YouTube channel. But I wanna start off just giving you the idea of how this looks like. And I'm gonna repeat this, week over week, month over month, quarter over quarter this year to make sure you really understand that. So what I'm gonna do here with you right now is I'm gonna map out year 1, 2, and 3 of a ramp up period. So what I want you to think about as we do this over the next couple of minutes is to think, what would it be worth to you to take 6 months, 12 months, maybe even 2 years or 3 years to really ramp up your capital, and then ultimately you'll be set for life generating income. I want you to think about that. What would that be? The unfortunate thing is that a lot of people are not willing to make that sort of quote unquote sacrifice to wait out at 3, 4, 5, 6 months, maybe a couple of years to really build up capital using a steady return strategy to really build up that capital and then be able to work from that in a much more meaningful fashion. So, but again, we'll talk about that throughout the year. Let me first flip the camera and I'm gonna show you guys what this looks like. So what I'm gonna go with here is a very sort of simple round number of an initial investment of $10,000. And let's assume in month 1, so you start off with month 1. Month 1, you start with $10,000, you make 10% on that, right? So in month 1, at the end of month 1, you should have $10,100, right? I'm sorry, excuse me, $11,000. My math is a little bit fuzzy here starting off the new year. So it's $11,000, okay? Now, if you move on to say month number 2, at month number 2, at the end of month number 2, so you're starting month number 2 with 11,000, you'll end up at month number 2 a little bit over $12,000. Right, and so on and so forth. So by month number 6, and again, I'm rounding up here a little bit, so or down, month 6, and you continue to reinvest those profits, which means that you get to buy more, trade more size, or make your investments larger every single month or every single quarter at least over time. So by month number 6, that would get you to be at around, at the end of the month, somewhere around $16,000. Okay, so what was at month number 1 a $10,000 account is now roughly a $16,000 account. In addition to that, what's happening is you are actually compounding that and making about $1,500 a month, right? And this is only possible because we are compounding and reinvesting these amounts. Now, if you fast forward and you say go to month 12, so the end of that year, or whatever 12 months forward from where you started, the initial capital, your 10,000, are now roughly, and again this is a rough amount, $28,000, and you're making almost 3K, or probably just around there, a month, right? So again, what was a $10,000 account is now about $28,000. This is the power of compounding, right? Now again, I will focus on the strategy and teach you all this stuff throughout the year. It's my main mission from an education perspective, and make sure you know how to do that, and it's real, that I'm not making this up and lying about it. This is all very possible if you have the right strategy. But I want you to focus on the power of compound. So by year number 2, month number 6, we're just gonna fast forward 6 months. So this is year 2, month 6. This account, which again, you started off with $10,000 in year 1, is now roughly $45,000. Okay? And it's making you about $4,500 a month, right? You move forward to month number 12 of year 2. My handwriting is atrocious, as you can see. You are talking about having an account of about $80,000, okay? And that's making you about $8K a month. 8K, okay? So again, and there's not very linear over time. It's not like you make every week the same amount of money or every month. This is, you know, the returns of this, even though despite the compounding, it's not like this, right? It's like, you know, the stock market returns are like this, right? The key is that ultimately it does go up, right? And it doesn't go down like most people do in terms in their trading. So by year number 2, the end of year number 2, you've turned your initial $10,000 into roughly $8,000, $80,000. That's 8 times your money over 2 years. If you're only willing to take 2 years, right, and actually ramp up your capital. Let's move over to year number 3. And now we're talking about having, at the end of year number 3, this is just a hypothetical sort of, you know, well, actually we were compounding at 10% a month. In terms of hypothetical, meaning not that this is not possible, but I'm rounding the numbers up a little bit or down a little bit so it smoothens out. But by year 3, month 12, so at the end of year 3, this account of 10,000 using this is now 230,000 bucks, right? And it's throwing off about 23K a month. Okay? How crazy is that? So if you only are willing to give yourself a little bit of time, and 3 years is not that much time to really give yourself time to ramp it up. Think about the amount of money, the amount of trade, how much better your investing and trading can be if you don't trade with 10,000, but now all of a sudden in 3 years you have a $230,000 account. The amount of leverage, and what happens is because now your account is so much larger, you get to trade with much less risk. If you trade with $10,000 or invest $10,000, because it's not that much capital in absolute terms. I know this is a lot of money for a lot of people, so I'm not belittling that, but just in absolute terms, the amount of risk you have to take on initially is more than initially it will be down here. Even though down here you are investing the same amount percentage-wise, you have much more of a cushion, right? So I want you to think about really making this one of your New Year's resolutions for 2019 is to really learn how to compound returns. Don't, every time you make a profit, try to double down and lever up or buy a new car. Try to really be conservative of focusing on that ramping up period that I looked at here. So whether your ramp up period is 6 months or 12 months or like I said, you know, 3 years, which I think is very appropriate, I think it's very important to have that type of a ramp up period. So anyway, folks, I hope this makes sense. And again, for me, 2019 is going to be all about teaching you how to compound those returns, how to make returns on a steady basis through the lens of month over month or quarter over quarter. So stay tuned for much more of that. And with that, again, I wish you a very happy New Year. Hope this was helpful, and I'll see you soon.